taken over $40,000 in payouts this month alone, and I'm gonna show you guys the exact strategy that I use. It is unbelievably simple, and I'm gonna teach you every step of it today. So the strategy from a high level is actually extremely simple. There's only 4 steps. I'm gonna break them all down today. So we're coming into market open on the current day that we're on, September 17th. I just clicked a random date, and I marked out our draws on liquidity. So you wanna be marking out your untapped overnight draws. The London high, the London low, the Asian low, and the Asia high. But if the Asia high and Asia low have already been hit during London session, then you're not going to mark those out. You're going to mark the London ones. Then you're going to come to the 15 and 30-minute time frame and start marking out your high time frame fair value gaps. So we have one on the 30-minute and 15-minute. It's kind of stacked on top of each other. So let's keep that there. Let's come down to the 15-minute. And any more? No, I don't really see any more gaps. So let's go down to the 1 minute. And on market open, we're wanting the market to pick a direction, to take out some form of liquidity, tap into some high time frame PD array, or take out an Asia high or Asia low. So as you see, we also have this internal high right here. Now, this internal high can also be used as a source of internal liquidity. So how does the market move from internal to external liquidity? So as we see on market open, let's wait a second. Boom. What happens on market open? We manipulate, take out this internal high right here, this wick, and manipulate into a 15-minute bearish gap right here. And so what am I expecting at this point to happen? I'm expecting at this point, we took out the internal high inside this PD array. I want to see price reject out of this. And so my bias is going to be short for right now. I'm looking short. We have a clear draw lower. We tapped into that high, and we are about to displace lower, as you see on the 5-minute that I just saw. But let's wait. And look what happens now. We are 10 minutes into market open, and we have a break of structure. This is what you want to see. Once we've taken out the high or manipulated into a high time frame PD array, you want to see the current range get broken out of. So this is our current range for the overnight or the London session. And what's happening? The market is displacing lower. So at this point, you need to create a narrative in your head. Create what is the market trying to do at this point? We took out the internal level of liquidity. Now we're going down to the external level, which is going to be this London low down here. So inside the 5-minute, as we're rejecting out of this 15-minute, we put in this gap here. Okay. And then we're going to come back down to the 1-minute time frame. We're going to let it price play out a little more. We still have not taken this low yet, but this gap almost gets inverse. Let's see if it actually gets inverse. 2472. I actually think it gets respected ever so slightly, but we don't take out that low. And that's the important part here. We don't take out that low. So the first step is basically you want to see the market displace. Market displacement, break of structure from current range. And so that's what we have here. We have this breakdown lower. And on that displacement, step 2, we kind of fast tracked it, is you want to see a gap put in on the 15 or 5-minute time frame. Fair value gap put in on 15 or 5-minute time frame, which we got right there. So let's come back down to the 5-minute. And we also put in another 5-minute stacked on top of this. And now when you have 2 legs, or when you have 1 leg, and in that leg, you have multiple fair value gaps stacked on top of each other, were you to look for a reversal, you would want to see this gap get inversed first. So my bias is staying short. Even if we come up, we run through this gap, I am still short until this gap gets ran through, because the market can reject from the first presented gap on whatever your leg the market is currently trading in. So let's come down to the 1-minute time frame and see what happens. We sit around, we still don't take out that low. All right, we're starting to get a little bit of displacement back to the upside. And this is what we want to see. We want to see this retracement back into our 5 or 15-minute time frame. So right now we're respecting the first presented 5-minute. Looks like we're running through it. And let's go to the 5 minute just so I can show you what I'm talking about. See how we inverse this? But what happens as soon as we touch the one up here? We get a aggressive rejection out of it. We get an aggressive rejection out of it. If we come down to the 1, 2, and 3 minute time frame, which are the time frames we take our entries on, let's bring this here so you guys can just see it. Once we put in this fair value gap on the 5 or 15 minute time frame, what we want to see is a fair value gap put in on the 1, 2, or 3 minute on the retracement to the 5 or 15 minute fair value gap. And that is exactly what we get. We retraced into this first presented 5 minute fair value gap, and we put in multiple, let's get rid of this 5 minute. We put in multiple fair value gaps on the retracement up. And that is exactly what we want to see. We want to see the market aggressively move back, reject out of it. And so for our entry at this point, I'm thinking, okay, we didn't take out this low. Some people might enter off an inverse fair value gap here and try to target this high, but you're delivering from nothing. That's why these high time frame PD arrays and these internal highs are so important, because they are levels of internal liquidity. And when you're taking a play, you always want to be delivering from something and delivering to something. As you see right here, this market is delivering from nothing. We inversed this first gap down towards this London low, and we didn't tap it, and we're just retracing. So in my mind, this is the market coming up for these stops. The people that have placed their stops inside of these gaps targeting this low, they are all getting stopped out. And this is why you don't want to initially enter and chase on this leg down, because you might say, oh my gosh, well, right here, we inversed all the gaps. There's no way we don't take this low out now. But the market can be irrational longer than you can be in your position. So the market could just reverse off absolutely nothing, come stop you out, and then run to your TP. And that's the worst feeling ever, because you know where the draw on liquidity is. This is the draw on liquidity, the Asia low or the London low right here. Now, what you want to do is optimize your entry. So once the market has retraced here, what we are looking for next is an inverse of the fair value gap that gets put in on the 1, 2, or 3 minute time frame on the retracement on the 5 or 15 minute gap. So let's go down to the 2 minute time frame. Let's go to the 1 minute. And I'm flipping through all these time frames because let me show you something. On the 3 minute, there is no gap right here, but there is one right here. And so if you enter only on the 3 minute while not looking at the 2 and 1 minute, there is a chance that if this gap gets inversed, this 2 minute might not. So whichever time frame has the first presented gap is the one that you want to be entering on, and the one that you want to see get inversed. And we actually get that on the 1 and 2 minute have the exact same gap because of how the candle closes lined up, basically. So we're going to play the market out a little bit. We dug a little deeper into that 5 minute gap, but as you see, we still rejected out of it. We didn't inverse it on the 5 minute time frame. Yes, the 1 minute candle closed above it, but the 5 minute did not. And that's what you want to make sure of, is that the time frame that the gap is put on is the one that you want to be inversing, or the one that you want to be entering on for the inverse. So if you have a 5 minute time frame, you don't want to enter on a 1 minute close outside of the 5 minute gap. So let's go down. Let's wait. First presented has not been inversed. Boom. Let's go back. First presented gap inversed. And that is actually the fourth step. First presented gap on retracement gets inversed. That is the last step. And at this point, you can now enter your position. And now our strategy, or the strategy that I use, is a little different. A lot of people are going to target this draw on liquidity, which you can. But what I normally shoot for is just 20 to 25 points, whatever that may be. And we go a 1-to-1 stop. So we actually do have this low around 22 points. So if we enter now, I am confident that we are going to come take this draw. And another thing that you want to keep in mind when taking these plays is that, yes, these 4 steps are what you're looking for, but you also want to have a clear draw on liquidity. Like I said, you always want to be delivering from something to something. So without a clear draw on liquidity, it's still not an A+ setup, even if you have these 4 things put in. Now, you can enter without a draw on liquidity. It's just going to be much lower probability and your win rate's not going to be as high. So we entered on the 1 minute time frame on the inversion of the first presented gap, and let's see what happens, ladies and gentlemen. Okay, boom, full TP hit almost instantly. When you're taking plays like this, I want to see the market flush through it. I want to see the market absolutely flush through that gap down to the next draw, or inversely, you can also take this, you know, the other way. If you're targeting a high, you want to see the market rally and pump through it. That's why our stops are usually 1-to-1 and they're not like super wide up here, because I'm playing the follow through of the inversion. That's what I am counting on to happen. And we actually have almost an 80% win rate using this strategy. I've only had 4 red days in all of 2026 so far, and it is February 14th. So the strategy is extremely simple overall, and we actually live trade it every single day in the Discord and also teach you guys more in depth everything you need to know to master the strategy and become a profitable trader yourself. Just click the link in the description. It's completely free to join. But overall, the strategy is pretty simple once you understand draws and liquidity and why the market is moving the way it's moving and understanding the higher time frame narrative behind it. That's gonna be it for the video. If you guys enjoyed and learned something new, make sure to hit the like button, comment, and subscribe. I'll be uploading almost every single day trade recaps and trying to get 1 to 2 videos out a day of educational content on strategies and more in-depth things that go into the intrinsics of the strategy. So I'll see you guys in the next one. Peace.